Live to CommSec now. Tom Piotrowski joining us for a look at the markets today. Might be another day in the negative, Tom.
It's going to be a challenging start to this morning, Pete. There's no question about that. Good morning. Having lost a little over 1% last week, the local share market is going to be down by about 1% when we kick off later on this morning, according to the SPY futures. So that reflects a generally downbeat session as far as Wall Street was concerned on Friday. There was some patches of optimism, and that was generally in the tech space. The Nasdaq was up by around 0.4%, but we had the S&P 500 down by 0.5%, and the Dow Jones down by about 1%. So in weekly terms, all of those indices were down by about 2% at least in the case of the Dow, or down 2.6% at the most where the Nasdaq was concerned. There were a number of important influences coming to bear on US stocks, including the economic news of the day, which turned around figures which reported what US workers earned and spent over the course of the last month, Pete. So within this is an important measure of inflation that the US central bank looks at most carefully, the PCE deflator. Mercifully, that was in line with the market's expectations. So in annualized terms, 3.7%. The market was looking for 0.3% in monthly terms. That's what it got. So at the very least, that was able to consolidate interest rate markets. So there wasn't that much move on the day when it came to both 2- and 10-year government bonds. However, there were very mixed fortunes when it came to the individual earnings of organisations. So Amazon, as an example, they bettered expectations. The stock was up by about 7%. Ford withdrew its earnings guidance because of the troubles that they're having in relation to industrial action. The stock down by about 12%. So quite a gulf between the best and worst performers. On the local front today, we don't have much in the way generally this week when it comes to economic news, but today we'll have some retail sales numbers. So that'll give us a sense of how households are feeling, given everything that's going on in relation to cost of living pressures and interest rates. But as I said, a pretty deep hole to dig ourselves out of, with the market expected to kick off with a loss of 1%.
Okay, Tom Piotrowski, 1%, that's a big hit. Tom Piotrowski, thank you.